Hey everyone, welcome to Property Finance with Lee. Today we're going to chat about a comment the RBA Governor Michelle Bullock made during the first Senate estimates hearing, the latest inflation figures, and how the banks are reacting. Just some background, if you're new to the channel, I'm a licensed mortgage broker with an extensive property investment background. I talk all things property financing and investing. If you're interested in watching more videos from me, subscribe and turn on notifications to keep up with my latest content. Let's jump in. During her first Senate estimates hearing as the RBA Governor, Michelle Bullock, for the most part, kept her cards close to her chest. What she did say though was, consistently we're seeing that although services inflation is declining, it's still higher than we're comfortable with, and it's also reasonably persistent. In a sense, the Q3 figures reinforced all of that for us. We've now got to take all the information away and think about our own forecast for that. We're looking at some of the more persistent parts of inflation and asking ourselves, are there signs that those might be coming down in the future? So yes, we are wary and we don't know if the job's done yet. And we've made that very clear even though we haven't raised interest rates since our last interest rate rise in June. The next thing she mentions is what this video is about. She says, we've made it very clear that we might need to go again. We hadn't ruled that out and we're in the same position. So essentially, Ms. Bullock is saying that she's not happy with services inflation and other parts of the price index, which aren't coming down. I'm pretty sure she's talking about fuel there. She mentions that the RBA needs to forecast the new figures and see how it all fits, and then finishes off by saying we might need to go again in reference to raising rates, spooking everyone. So we can get an understanding of what she's referencing, let's have a look at the latest inflation figures. We can see from data released by the ABS on Wednesday that the consumer price index rose 1.2% in the third quarter. This was higher than market forecasts of 1.1% and up from a 0.8% increase the previous quarter. The annual pace of inflation has slowed to 5.4% from 6%, but this is again above what was forecasted at 5.3%. This is one of the main things the RBA is looking at. They don't just want to get inflation down, they want to get it down within a certain time frame. We can see that the biggest contributors to the third quarter inflation figure was fuel, rents, and electricity. Fuel prices have risen 7.2% from a year ago. Inflation has also remained high for a range of services. We can see that in the costs of vets, restaurant meals, and hairdressers. Rents have also risen 7.6% from a year ago. This is the biggest increase since 2009. Insurance price increases seem to be astronomical as well. The one good thing I have noticed is that food price inflation seems to have dropped right off. Fruit and veg seem to have gone backwards. Economic data aside, as a fundamental cost of living, this is a good sign for families living day to day. Of course, there are still ridiculous increases elsewhere, like we just saw in the cost of rental and other living expenses, but it's good that food at least is heading in the right direction. Now to the banks. What are they saying? What are they doing? Last Wednesday, CBA and ANZ came out and abandoned the view that the RBA would continue to pause the cash rate. Now they see a quarter-point hike to the cash rate in November. I can tell you that over the last week and a bit, I've gotten notifications from a few lenders, Suncorp, NAB, and Bank Australia, telling me that they're increasing their advertised rates. Of course, when lenders decide to increase or decrease rates, there are many factors that go into the decision-making process. It's not just tied to the cash rate, but the fact that rates are being increased whilst the cash rate hasn't for many months may reflect what they believe is coming with the next rate decision. A few weeks ago, when I talked about the RBA's decision not to increase the cash rate in October, I mentioned that I wouldn't have been surprised if they had passed on a quarter-point hike rate due to the increases in the cost of fuel, which was evident back then. I think this month, given Michelle Bullock's statements, the newest data released by the ABS, the banks forecasting, banks proactively increasing their interest rates, and the fact that fuel is still expensive, everything is pointing to a rate hike in November, which would suck because the cash rate decision is set to be announced on the same day as the Melbourne Cup. Your horse could get up and win, and by day's end you could still lose as a mortgage holder. It's just not fair. That's it for today, guys. If you think you're on a high rate and unsure if there's a cheaper loan out there for you, don't be afraid to reach out to me and ask for a free home loan health check. There's still a lot of competitive products out there. You would be surprised what kind of a rate you can get. Thank you for watching today. If you enjoyed the video, please give it a like. And if you want more content like this, please subscribe to the channel. I'll catch you guys next time. Thank you.